All right. Good to see everybody. How you doing, Dallas? Bobby Piton here. We're going to go through a few companies. Keep in mind, there's nobody of substance reporting today. Markets are kind of neutral. Nothing crazy going on. Bonds are actually strengthening a little bit. I think 4 basis point on the 10-year. And it seems, at least on the surface, where only time will tell how long this sticks, that the inflation number came in lower than anticipated. And so, you know, the question becomes, was that huge spike that we saw of inflation earlier this year, that almost 5% annualized run rate, was that a one-time adjustment from recalibrating the U.S. economy and beginning the process of onshoring manufacturing capability onto the U.S. soil? The initial inflation, if you think of it from this way, if we, so let me take a step back here, okay? For over 2 decades, we've been importing deflation from slave wage China. China pays the citizens there slave wages. And as a result of those slave wages, it has really crushed the productivity incentive of this country. Because if you know, let me give you a simple example. If you took and you paid somebody in the manufacturing sector $20 an hour in the United States, and let's say the average Chinaman was making $5 an hour, this is just an example. I think they're making less than that. But if they're making $5 an hour and an American is making $20 an hour, and all of a sudden, every year in the United States, if we boost the productivity of the American workforce by 3%, then that's the equivalent of 60 cents, 3% of $20, 60 cents more productive. And that's what leads to real wage gains. So if you can boost the output through technological improvements, through investment, through research and development, and you can boost it by 3%, you will raise wages in the United States will go up by the productivity increase over time because of healthy competition. Now, if you're a multinational U.S. corporation and you're like, well, why do I want to invest on U.S. soil and spend the money when I could pick up more than 60 cents? I'll go to China and I'll pick up $1 with no money. I don't have to put up any money. And that's what we've been living through for the past 2 decades, that they literally, it's called labor arbitrage. So they've literally been taking wages in the United States and say, you know what, we don't want to invest, we don't want to invest in Americans. We'd rather take and find really cheap labor from people that don't even share our values and are atheists, and we'll do business with them instead. It doesn't matter if they violate human rights; that's not important to us. And if they persecute the Uyghurs and put them into concentration camps, that's okay too. And they'll look the other way on that dog festival too, where they cook dogs, the only animal that can communicate with human beings through our eyes. Yep, that's okay too. Don't worry about it. Let's just get that $1 per hour from Chinese people instead. And that, folks, that's what's been happening for 20 years. And so it is what it is. I didn't make it so. This has happened right before our eyes as a nation, as a humanity, and we allowed evil people in the CCP to enslave all the people of China, and then attempt to possibly enslave the rest of the planet. It's pretty horrific. It's almost like a Trojan dragon, right? They kind of like laid eggs all around the world, and they wanted to unleash havoc. Oh, and that's right, they did, didn't they, last year? And so I want to be careful because, as you know, there is censorship alive and well, and there are some Chinese, probably traders, CCP agents within Google and other tech companies that probably don't like me talking about China right now, but that's all right. the truth hurts. And the truth needs to be heard by everybody so that we make the adjustments accordingly. But with that backdrop, when we saw inflation here in the United States, the first few months of the year, first 6, 7, 8 months, 5%. And what it does when it occurs is it jump starts almost like an EKG. It like inflation initially, think of it as like paddles on your heart if you had a heart attack. If you the initial jump in inflation can sometimes spark companies to come up with creative ways to save money because they can't pass along the costs. And so what do? They find software. They figure out how their employees can work a little smarter. They cut hours from people that that aren't as productive as the company needs them to be. Those are some of the ways in which inflation initially hits the U.S. economy. The question becomes, does it become systematic? Does the inflation stay in place? And so that's the tricky thing. And right now, the number that came out today is suggesting that no, it may not stay in place. It might actually come right back down. But meanwhile, we've gotten people thinking again, the business owners of this country, hopefully, especially domestic companies, to be thinking in productive terms. And so I do believe that some really great things are going to be happening if this is the start of something. Maybe President Trump's motto, or his saying last year, "The best is yet to come." Maybe the best is truly yet to come as we rejuvenate and revitalize the manufacturing sector of this economy. Personally, I don't think we should ever allow more than 1/3 of all of our production for any product or service to ever be offshored. That's my personal belief. And I would even say for food, I don't think more than 10% of our food supply should ever come from overseas. I think it should come from U.S. soil, U.S. dirt, and U.S. laws and regulations. And I think anything that comes in from overseas should be very clearly labeled so that we know where it's coming from. And with regards to processing of food, I understand that some American companies send fish and other products to China to be processed. I would end that practice. I think that's insane. We should have our food processed by Americans, living by American standards of quality in food and so forth. And I think that I think this nonsense has to stop, because we've seen how devastating it can be and how much destruction how much destruction is possible that undermines all the so-called savings that were occurring by international trade. I'm all for free trade with free nations. Let me say that again. I'm all for free trade with free nations, nations that allow their citizens to actually live and vote freely and in honest elections, not just free elections, honest and audited elections. That would be my new caveat with regards to that. And frankly, all of our allies, they should literally, follow the Second Amendment of the United States. Every single one of their citizens should have a right to bear arms to protect themselves from foreign as well as domestic enemies, because I trust people a hell of a lot more than governments. So with that said, let's go into a couple of companies. Like I said, there isn't a whole lot going on, so I'm going to share my screen, and we're going to go into a couple things that are happening. As you can see, gold is up $1 today. Even though treasuries are rallying 1%, so gold is going up by less in percentage terms, which basically saying that inflation's not there. Silver is barely up; it's at 22, and you can see that silver has kind of cascaded down. It was at $26 in June; it's at 22 now, and that's a sign of what? That maybe inflation is going to be short-lived, right? So that's what's going on with regards to silver. So in terms of TLT, I've mentioned that the VIX is 19, and that. Let's see the Bitcoin. This is a proxy for some things too. Obviously, Bitcoin's been kind of choppy this year. It went up to almost 60, went down to under 30, and then it just hit 52. Now it's at 46. So Bitcoin is bouncing around a lot as well this year. But now going to what the big movers today are. There's a company called Las Vegas Sands, and this company has very large operations in Asia. And now keep in mind, a lot of the casinos are under pressure this year. So this company is worth almost $30 billion, casino stock. And you can see the stock was like $60 at the start of the year. It's at 37. It's one of the few companies not doing so well this year, as well as the entire industry. A lot of the gaming stocks are not going so well this year. And so Las Vegas Sands is down today, as well as Wynn, as China molds tighter rules for casinos. Look at that. So I happen to know that Las Vegas Sands and Wynn Resorts have a massive presence in China. Obviously, there's some people that knew about this taking place prior to the news coming out of China. You can say some Chinese Bolsheviks probably were trading on this inside information. They drove the stock up to 140 in the case of Wynn in March of this year, and now it's at 90. So here we are, Wynn, $10 billion. It's just like that, a third of it's gone. About $5 billion of valuation is gone. And so, somebody just mentioned trafficking is going down, so money laundering in gaming is probably hurting. I don't know, Karen. Maybe that's the case. I can't speak to that, but it sure is an interesting outlook if it is taking place. I don't know how much laundering of money is taking place through these publicly traded companies, but one thing I do know is it's worth looking into. I do agree with you there that our politicians have done an absolutely horrific job of looking into the laundering that's taken place through publicly traded companies of all sorts and international trade flow data. I think a lot of this laundering is possibly taking place right through the trade data. And I think that we need to look into that. So, wow, Warren. So I'm just going through some of the news stories and talking to them, folks, because the deal is there's nobody really reporting. And since nobody's really reporting, I'll just kind of pick off and look at some stories and talk about it for a few minutes, and then we'll head out. So obviously GE, Southwest, and Oracle. Let's take a look. Actually, Oracle did report last night. So let's go to Oracle, and we're going to go to the company filings. So that's one company we could look at. Database company. Larry Ellison is from Chicago, I believe. And yeah, I think that's right. So today, that he reported last night is when Oracle reported. So let's take a look at how Oracle's doing today. We're going to pull it up, and we're going to look at, okay, it's down $3, 4%. And, they have two CEOs, Mark Hurd and Katz. Now, keep in mind, Mark Hurd got in some trouble with a sexual harassment lawsuit years ago. I forgot which company he was at. Let's take a look. I always find it interesting how they recycle executives. And so obviously, he managed to get through that okay, because I think he's getting paid $40 to $50 million being the CEO of Oracle. And so, he divorced in 87. Hold on a second here. Where did he? Oh, that's right. He was at HP. So I think it was, HP sued Hurd. So what ended up happening, I think he got accused of not doing such good things there. Let me see. Anyways, it's always interesting. This is my, oh, sorry, you guys can't see this. Sorry. The screen wasn't very loud. But my gossip pages are what's happening with the executives. So I like to sometimes look into their background to see what kind of trouble they're finding themselves getting into when they make a little too much money. It seems as though sometimes when people make too much money, they start to think they can do whatever they want with impunity. And, but look, he landed okay. He did okay for himself. He landed in a $30 to $50 million a year job. So people didn't really seem to care. But once again, when shareholders aren't involved in the voting process, this is what happens, folks. So earnings up 86 cents, or 86, yeah, to 86 cents a share, up 19%. Fusion, this is ERP. So let me see here. ERP cloud revenue up 32%. Okay, so the stock is down because quarterly revenues are up 4% year over year. So this is not a very fast grower relative to other companies in tech space, which is probably why the stock, the stock is down today, 4%. So cloud services are only up 6%, which is kind of shocking as well, because cloud is a big area of growth for Microsoft, Amazon, Google, but Oracle hasn't been able to really kick it up more. Cash flow was up 17% to $15 billion of cash in the trailing 12 months. And so, so now they have 25% of total revenue is new cloud businesses. So they're saying that's their fastest growing business, but it's not growing as fast as you would think relative to the competition. So once again, this is one of the things you need to look at other companies to see how fast the growth rates are, to have a perspective as to what they're saying versus reality. But I do think it's interesting that this is for the 3 months ending. So they switched their business model to cloud services and licensing. And services is 800 million. Hardware is not so much anymore. They're kind of moving off of that. And then let's see. You can see how profitable it is. They have a 24% net profit margin, 2.4 billion on 9.7 billion on the quarter. And they bought back quite a bit of shares. Look at that. They bought back almost 300 million shares versus a year ago. That's pretty impressive. They bought back almost 10% of the company. When you have $15 billion of cash flow from operations, 300 million shares, to give you an idea, 300 million times $100 would be $30 billion. So $30 billion. So obviously we got to look at where do they get that money from, because they only had 15 billion of cash flow, but they bought back almost 30 billion at current prices. Maybe they got it a little cheaper. Maybe it was 25 billion. So their debt should have gone up. So let's go take a look at how much their debt went up on their balance sheet. So you can say, they had actually, our cash went down. So their cash did drop from 30 billion to 23. That's $7 billion swing. You can see their total current assets are down 8 billion, 47 down from 55. So that could be it. That could be part of it. So current liabilities are down only 1 billion. So the bulk of it came from there. Notes payable, 75 billion. Okay, well then they bought the stock back at cheaper prices. That's what it's basically telling you. Because if they bought back almost 300 million shares of stock and they had $15 billion of cash flow, then the only way to really justify that is they had to get pretty good prices, right? And they ran their cash balance down by about 7 billion. So let's take a look what that looks like. I'm just curious what the stock was a year ago. Maybe they've really loaded up when things were in the sewer last year. We're just going to look there. So we'll quickly say, 1 year prices. Okay, so here you go. So the stock was $60 a share in October of last year. So it's up 44%. So on the surface, it looks like those were very good purchases. They bought back almost $300 million, 300 million shares when the stock was 25 to 30% cheaper than it currently is. And, it looks as though that was a good decision because the stock's up 40%. So there you go. Sometimes if the company is generating a lot of cash instead of doing something stupid and wasting the money, wasting money on acquisitions that are foolish, sometimes it just makes sense to buy back your stock, which is what happened with Oracle, which is it's good to see that they did that. And part of it is because I think Larry Ellison is obviously still very much involved. And Larry Ellison, he's a multi-billionaire for a reason. I think he must be up to 30 to 40 billion. Let's take a look at what Larry Ellison's net worth is. So even though he's not the one running the company, I'm sure he's on the board. Holy cow. Folks, he's worth 117 billion. I didn't even realize Larry got up there. So he's in the $100 billion club. So Larry Ellison, he went to U of I in Champaign, Urbana. He was born in 1944. And Larry Ellison, that's why his net worth jumped by $40 billion. University of Chicago, and he went there 1964 to 66. And this is not a bad story, about little Larry. Not little Larry. He's big Larry. He's larger than life Larry with $100 billion. But no, he's obviously done quite well for himself. He is the largest owner. He's the owner of the 41st largest island in the United States, Lanai of the Hawaiian Islands. He owns it all, 3,000 people. He was born in New York. Wow, so he went to these schools, but he didn't finish with a degree. So I guess he was making too much money. He said, the hell with it. I don't care if people make fun of me if I don't finish college. I'll show them. And sure he did. He definitely did. So he was born in New York, unwed Jewish mother. Biological father was Italian, U.S. Army pilot. Once again, he didn't meet his biological mother until 48. So he was put up for adoption at the age of 9 months. His mom gave him to her aunt and uncle for adoption. So I do remember reading he grew up on the Chicago South Side in the projects and didn't do so well. So there you go. So Larry, he's got a very interesting life, and he's done unbelievable. So God bless him for doing work and turning a horrible situation, getting ammonia at 9 months old, his mom putting him up for adoption. And, just like that, he's one of the richest human beings on planet Earth in the history of planet Earth. And he's worth over $100 billion. So there's the story of Larry. So curious to see if I don't have any idea. I haven't really followed him. I'm wondering if he does good things with his money or he tries to do damaging things to the world. I'm not sure. I know that there are some real criminal elements out there doing some really bad stuff. I hope Larry's not one of them. So I hope you guys enjoyed this, and I will talk to you, I guess, tomorrow. God bless, and I will see you soon. Thank you.